The concept of making a trade risk-free by adjusting the stop-loss level after the trade has moved into profit is often referred to as locking in profits or moving the stop-loss to break even. This strategy involves adjusting the stop-loss order to the entry point, the price at which the trade was opened, once the trade has moved in a favorable direction, thereby ensuring that even if the market reverses and the trade closes, it does so without incurring a loss. As an illustration, consider a buy order where the chart ascends, resulting in a profitable trade. At this juncture, a common practice is to adjust the stop-loss to the entry point. Consequently, if the chart reverses its course and descends, the trade is exited without incurring any losses. Conversely, if the chart continues its upward trajectory, additional profits can be captured. Furthermore, in the context of a sell order, once the trade becomes profitable, a strategic adjustment is made by moving the stop-loss position below the entry point. This tactical maneuver effectively transforms the trade into a risk-free scenario. Should the market experience an upward shift, the trade is secured without any loss.
Are you a trader? Aren't you profitable yet? Do you need a free consultation? Go to the Forex Academy website. Select Consultant Appointment in the main menu and finally set up an appointment to talk with our experts.
We express our gratitude for your attention. Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.